Okay, let's start the second session. Here we are going to especially discuss the business mathematics and statistics paper. You know the exam planned to held on March, but however it was postponed. Now your pilot papers already uploaded into the CA Sri Lanka website. Based on that, today we are going to discuss business mathematics and the statistics paper, English medium. The entire paper will be discussed during this video session. Let's start the video session now. Okay, as we discuss, the same rules and terms applicable for this paper also. You have only 2 hours paper, 100 marks per the 2 hour paper. You have 50 MCQ questions, only MCQ. You have to select your answer. But keep your mind, you have 50 questions to answer within 2 hours, right? All these questions consist mathematics and the statistics, right? This maths and the stat paper include majority of the questions are calculation questions. Therefore, you have to use your draft papers, you have to do calculations, thereafter you can select the answer. Therefore, I believe in the exam you will receive draft papers. Using draft papers and the calculators, you can calculate your answer as like in a essay type question paper. However, final answer need to select out of the answers given. Okay, let's start with the question number 1. The question number 1 says, what is markup of a product which maintains a profit margin of 40%, right? That is the question. Now you need the calculators to calculate this. Therefore, you have to be careful when you are attending the exam. Please bring your calculators to calculate everything. Don't believe even this is multiple choice question, no need to use calculators. You have to use because same questions you have as in SSI paper, right? Let's start the calculation of first question. This is a lesson regarding markup and margin. What is the markup of a product which maintains a profit margin 40%? Right. Now you need to understand what is markup and what is margin. That is the point. Let's take the whiteboard for this calculation. Before moving to the answer directly, I will explain the relationship of markup and margin, right? Markup and margin. Let's assume a production cost of a unit is 100. Cost of a unit is 100, right? The 100 is the cost. Now what is markup? Assume entity wants a markup of 25%, right? Markup of 25%. The markup of 25% means you will set your profit on cost. When the profit set on cost, that is markup. Therefore, the cost is 100, you required markup 25%. Therefore, selling price will be, right? Selling price will be 125, right? Since the cost is 100 and you add a markup on cost, selling price will be 125. Now, when it's come to the 125, clear? You can see here, within this 125 consist 100 cost and 25 profit, right? This is the markup added. Now, as a percentage of margin, now here 25% means 1/4, right? 1/4. But when it's come to here, profit as a percentage of 125, that is 1/5. Clear? Therefore, same profit, the profit was added on cost 25%, that's why selling price set at 125. Now, if you take this 25 as a percentage or a number on the selling price, right, it is 1/5 on selling price, it is 1/5, or on cost it is 1/4. As a percentage, you can say 25 divided by 125 into 100, that is 20%, right. Then same profit was 25 added on the product, right. When it is on cost was 100, as a percentage it is 25% or 1/4. On selling price, this is cost, then on selling price, your selling price will set at 125, since cost 100 and profit is 25, selling price will be set on at 125, then as a percentage it is 20% and 1/5, right. Therefore, when the profit is stressed on cost, it is called markup. This is called markup. When the profit is expressed on selling price, that is called margin, right. This is the explanation. Now let's take the question. In this question, they clearly mention that the profit margin 40%. Profit margin for 40%, that is margin. Margin on selling price. On selling price, profit margin is 40%. Let's assume, because margin given on selling price, we know already that. Let's assume selling price as 100. In such a situation, profit margin will be 40 as a number, right. Profit margin will be 40, since 40% on selling price. Margin always expressed as a percentage on selling price. We assume selling price as 100, then profit will be 40. If profit will be 40, out of this 100, this is profit, easily you can find out the cost will be 60, right. Cost will be 60. Now they are asking the profit as a percentage on cost, that's called markup, right, as a percentage on cost, that is 40 divided by 60 into 100, you know, that is 2/3, that is 66.67%, right, 66.67%. Therefore, you can see here the answer D, right, answer is the D. When the profit margin 40%, markup will be 66%, 66.67 or 66 and 2/3, right. That is the answer for the question number 1. Let's take now question number 2. Right, the second question, an entity sells products by adding a fixed markup before allowing trade discount and adding VAT 15%. Cost of goods sold during the period 400,000 and trade discount offered 20% on the list price. Total sales proceed collected was 552,000. What is the total markup? That is, total markup means before deducting discount. They ask you what is the total markup. Let's calculate now. I think you have the question paper with you, right? I will take the whiteboard for the explanation of the question. Now, according to the information, they mention assume right, cost of a product is 100, right. Then they want to give 20% discount and they want to add 15% VAT, right. Let's apply this information to the assumed cost assume selling price. Now let's take this selling price, sorry. Now you need to give 20% discount, therefore you will deduct 20% discount, then selling price will be 80, right. Now you need to add your VAT, right, add VAT 15%, that will be 12, 15% on this, right, 12. Therefore selling price will be 92. Selling price is 92. Now if somebody asks you to calculate 100 using this information, assume you have 92 now, right, you need to calculate backward. What you have to do? You know this include VAT, therefore you need to add VAT, then you have price before the VAT but after discounting, right. Therefore to calculate backwards, what we have to do? This 92 include VAT, therefore to eliminate VAT we have to take 92 then divide by 115 multiplied by 100, then you can have price before the VAT. If you multiply this by 15, you can have VAT here, right. What you need to do, if somebody asks you to take this price and calculate backward, take 92, 92 include VAT, therefore here you have 115, then you will multiply it by 15. Let's see how much the VAT portion included. 92 divided by 115 multiplied by 15, answer is 12. VAT is 12. Since VAT is 12 and VAT added to the price, price before VAT should be 80. Now you know this is given after discounting 20%, right. This is given after discounting 20%. Therefore this is consist only 80%. Clear? This is consist only 80%. Therefore how we can calculate the discount? 80 divided by 80% multiplied by 20%, that is 1/4. Therefore discount will be 20. Once discount deducted, you have 80. Therefore price should be 100. That's how you have to go back. The same scenario you have to apply in this example. They have mentioned they have collected cash. They have collected cash 552,000. As I told you, this include VAT. Therefore 552,000 divided by 115 multiplied by 15, you have VAT. If you multiply it by 100, you have this answer. Therefore we need to go to here. Therefore let's take this answer without taking VAT answer, right. 552,000 divided by 115 multiplied by 100, price before VAT will be 480,000, right. If it is 480,000, once you multiply this by 15, you can have the VAT, or the difference is the VAT. Now we need the original price before deducting discount. You know our discount is 20%, therefore 480,000 will be divided by 80%. If you multiplied it by 20%, you can have VAT, the discount, but if you multiply it by 100%, you can have the original selling price directly. Therefore this will be divided by 80%, then price will be 600,000. Clear? Therefore the original selling price 600,000, according to the question, cost of goods sold 400,000. Therefore total markup would be 200,000, right. Total markup would be 200,000. You need to keep this in your mind how you have to calculate backward. First, I have told you how it is happening using an assumed one number 100, but same figures according to the question. Then I have used question informations to calculate backward. Therefore, they are asking a question, what is the original contribution, original profit? The original profit is 200,000. That answer is answer D. Answer is 200,000. Right. Now let's move into the question number 3. Please take a soft copy or hard copy of the pilot paper. I think you can't take hard copies now. However, you can take soft copies for your understanding while I am reading the question. Question number 3, I will read it for you. An entity sold 200,000 item of a product at a price of 40 and variable cost of 20. Sold. This is fast quantity 200,000, right? Selling price 40, variable cost 20. Therefore, contribution 20. That was the information given. Therefore, you can calculate total contribution, total in the past situation, right? Total contribution will be 20 rupees into 200,000 units. Therefore, your total contribution will be 4 million. Yes, rupees 4 million. This is the total contribution in the past. Now let's see the given information in the questions. Here there is a mistake according to the question. This first number of items sold, it should be not 250, it should be 250,000 units, right? It should be 250,000 units. Why I am telling that? Here see, sales volume increased by 25%, because this information given here, following information relates to the present quarter. Previous information given for the past. Now they are giving information for the present quarter. In the present quarter, here they have mentioned sales volume increased by 25%. Therefore, currently you have 200,000 units. If it is increased by 25%, definitely it will be 250,000 units. Therefore, number of items sold 250,000 units. That would be the figure, right? Now let's take these figures into the whiteboard. I think you have the questions, or you can go back to the video and see the question, because while I am explaining the question, I will summarize here. Now let's see what is the present situation. In the present situation, they mention sales number of items sold 250,000, or sales volume increased by 25%. Let's take, this is the past sale volume increased by 25%, 1.25. Therefore, it will be 250,000 units, right? 250,000 units is the quantity. Then they have mentioned selling price increased by 5%. This is the selling price, see, right? This is the selling price. Selling price increased by how much? 5%. That is 40 multiplied by 1.05. When 40 multiplied by 1.05, that will be 42 rupees. Then they have mentioned sales volume, that's okay, it is considered. Variable cost increased by 10%. Variable cost 20, increased by 10% means 1.1 multiplied by 1.1, then it will be 22. Therefore, new contribution will be, retain it as 20 as it is, as the reference, right? Then they have mentioned fixed cost increased by 200,000. Now here they didn't given the fixed cost, but when the fixed cost, say here fixed cost has head x, fixed cost x, here also fixed cost would be x. Why? Fixed cost is same, any number of quantity level within the capacity, even you produce and sell 200,000 or 250,000 units, your fixed cost will remain at a single value within the capacity. Therefore, fixed cost is a constant value within the capacity. However, if it is constant, it should be x here and it should be x here, because they are not given past fixed cost. We have to assume it as x. However, when it's come to the present situation, it is increased by 200,000. That means you have additional fixed cost of 200,000 rupees that need to be considered under the present situation, only this 200,000, because this is common for the both cases, only additional is 200,000. Now question is, what is the impact on profit due to above changes? Right, let's calculate the profit. We can calculate total contribution like this, 20 rupees into 250,000 units, that will be 5 million. 250,000 unit into 20 rupees, then it is 5 million, total contribution 5 million, right. Now fixed cost same here, right. Now you can see this is increased by 1 million. This is the impact on total contribution. If fixed cost remains same, profit also increased by 1 million, right. However, the fixed cost increased by 200,000. Therefore, profit should be increased by 800,000, right. If this is remain as x, definitely no increase in fixed cost, then profit increased by 1 million, but fixed cost was increased by 200,000. Therefore, profit should be increased by 800,000. Let's see the answer for question number 3. Answer would be 800,000. Yes, here answer A, increase the profit by 800,000, right. Now let's take question number 4. Please read the question. I am directly using whiteboard, since each and every question we have calculations. Please download your question and watch the video while you referring the paper, right. An investment of 100,000, read the question. An investment of question number 4, an investment of 100,000 at 12% simple interest rate per annum will mature after 3 years. That is a one information. 100,000 investment at simple interest rate for 3 years, right. The interest rate is simple interest rate 12%, number of years 3. Therefore, at the end of 3 years, you will be earn 100,000 plus 100,000 into 12% into 3%. 3 years, sorry, 12% into 3 years. Why? It is simple interest. Then your total interest will be 36,000. Therefore, amount can be collected at the end of the 3 years 136,000 according to the simple interest rate of 12% and number of years 3, right. What is the annual compound interest to be offered in order to get the same amount at the maturity after 2 years, right. This is a simple interest example, right. Now they are asking what is the compound interest to be offered in order to the same amount after 2 years. That is the case. Now here compound interest, amount 100,000, interest rate is the question, right? Compound interest rate is the question. Number of years they have mentioned it should be 2, and at the end value would be 136,000, right? Value would be 136,000. To have this answer after 2 years and a compound interest rate of the investment of 100,000, what would be the rate? That is the question. In the compound interest rate, you know the answer is the future value, the total value you can earn equal present value, that is the amount invest into 1 plus r power n, right? Now future value after 2 years you can earn 136,000. Today you will invest 100,000, right? 1 plus r, you don't know what is r, but you know number of years in 2 power 2. Now you can solve this question. How? Take this 100,000 to the other side, then 136,000 divided by 100,000, right? Then you can take this power of 2 into the other side, then it's like this, right? Then you can have only, now you have taken this into the other side, you have taken 2 also into the other side, the power of 2 into the other side as square root of 2. Now you have only 1 plus r here, right? 1 plus r here. 1 also you can take into the other side. How? Minus 1, because here you have plus 1. Now this is the r. What we have done? We have taken 100 into other side, therefore 136 divided by 100,000. Then we have taken power 2 into the other side, square root of 2. Then we have taken 1 into the other side, then plus 1. Once it goes to the other side, it is minus 1. Therefore interest rate will be the answer of this. What is the answer of this? 2 1.36. Once you divide this, 1.36 minus 1, that is 0.1667, right? One six six two. Therefore, as a percentage, you can say the answer 16.62. That answer appearing in the answers list, that is answer B. Therefore, the interest rate to have this amount and a compound interest rate after 2 years, once you invest 100,000, rate would be 16.62. That is answer B for the question number 4. Now let's take question number 5. Read the question. I think you already read the question. A bank offered 12% per annum for deposits over 100,000. What is the annual effective interest rate if the interest is compounded monthly for an investment 120,000? Right? That is the question. Bank generally offer 12% for 100,000 or above investments. Right? What is the annual effective interest rate of interest if the interest is compounded monthly for an investment is 120,000. Now 12% is per annum, right? If it is compounded, monthly, the monthly rate will be 12% divided by 12, therefore 1%. Monthly rate will be 1%, right? Under the 1%, you can calculate the total amount you can receive after 1 year once you deposit 100,000, like this. Now, for 100,000 or above, you have 12%. Now, they have invested 120,000 according to the question. They have invested 120,000. If it is compounded monthly, 1 plus r power n. If you take it monthly, n will be 12 months, rate will be 1%. Therefore, you can rewrite this 120,000 into 1.01 power 12. Let us see the answer. 120,000 into 1.01 power 12, that is 135,219. You can earn 135,219 after 1 year, right? This is after 1 year on compound interest rate, compound monthly, compounded monthly, right? Now, they are asking, if so, what is the effective interest rate? You know, to earn this, you have invested 120,000. Therefore, what is the net interest? Net interest equal 135,219 minus 120,000. Therefore, net interest will be, the net interest you have earned 15,219. You have earned this 15,219 on 120,000 per annum. Therefore, effective interest rate will be 15,219 divided by 120,000 and see how much per annum. 15,219 divided by 120,000, the amount you invested, then as a percentage, interest rate will be 12.68. 12.68, right? That is the answer. It is given in answer C. What was the question? Generally, banks give 12% interest per annum per year if you invest 100,000 or more, right? Now, the specific bank pay interest monthly basis, right? Pay interest monthly basis, and that is compounded interest. What is compounded interest? Once you deposit 120,000 today, for the first month, they will calculate interest. If interest rate per annum 12%, monthly rate will be 1%. Then for the first month, they will calculate 1% for 120,000. If you calculate 1% on 120,000, what is the answer? Answer is 1,200. Therefore, at the beginning of second month, your investment will be 120,000 plus 1,200. Then second month, interest will be calculated on 120,000 plus 1,200 first year interest. Therefore, second month interest will be calculated for both capital you invest plus first month interest. Then at the end of the second month, you have 2 months interest. Therefore, third month interest will be calculated on both principal plus previous month interest. That is called a compounded interest monthly. Once you earn like this, you will be ended with 135,219 at the end of the first year. If you calculate what is the net interest you earn, this is compounded monthly 15,219, as a general percentage of the investment you made, it is 12%, 12.68%. That is the effective interest rate of the investment. Why? If you invest 120,000 at 12% per annum, not compound monthly, what will be the interest? 120,000 into 12% per annum, 14,400. Why? Interest has been calculated at the end of the first year, right? I will show you it. Okay. This is the total interest you can earn if interest calculated monthly. If interest calculated annually, then 1.12 power n, only one time, but 12% per annum. In such a case, total value will be 120,000 into 1.12, that is 134,400. Now, what is the net interest? Net interest is 14,400. Now, see these two net interest. Why this is more than this? Here interest calculated at once per annum, but here interest calculated monthly. Therefore, monthly interest also subjected to the interest in the next month. That's why you have higher interest. In such a case, effective rate is not 12, it is more than 12 because you earn more than 12, therefore 12.68 if you are getting interest monthly. Answer for the question number 5 is C. Right. Now, let us take question number 6. Read the question number 6. Right. Question number 6. What is the present value of 50,000 to be received after 5 years from now if you expect a return of 10%? Present value of 50,000. It's a very simple question. Let's use the calculator. You know how to calculate the present value. This will be received after 5 years. Therefore, you need to discount this to have the present value. At 10% discount rate for 5 years, you know what you have to do. You need to take 10%, 5th year discounting factor, that is 1 divided by 1.1 power 2 power 5, because 5 years, 1 divided by 1.1 power 5, then you have the 10% discounting rate for 5 years, then multiplied by 50,000, you can have the present value as 31,046. This is the answer. 31,046 is the answer when you can receive 50,000 after 5 years, right? After 5 years at 10% interest rate. Therefore, you have to calculate the discounting factor for 5 years using 10%. That is 1 divided by 1 plus r power n. 1 divided by 1.1 power 5, then multiplied by 50. Answer is 31,046. Then let us move into the question number 7. Right. Question number 7. What is the cumulative value of deposit of 100 made at beginning of every month over a period of 2 years at interest rate of 18% per annum compounded monthly? Right. This is the story. Let's take the board. Right. What is the cumulative value of deposit of 10,000 made at beginning of every month over 2 years? See the story, over 2 years. That is means when you made monthly, you have 24 months. Finally, you have 24 months, right? Starting with beginning. What he going to do? every month beginning he will invest 10,000. Every month beginning he will invest 10,000. First month beginning, then end of first month, that is second month beginning, end of second month, third month beginning. Likewise, every month beginning, here you have 23, right, up to 23 beginning. Now here 23 end, that is 24 beginning, you will invest 10,000, right. What is the interest rate? Annual interest rate, right, annual interest rate 18%, that is 18% per annum, but interest will compound monthly. Therefore, monthly interest rate will be 18% divided by 12, that is 1.5. Therefore, monthly interest rate will be 1.5. Now, let us see, they are asking what is the total value you can earn. Now, this first 10,000, let us take this first 10,000. You have to pay interest for this 10,000 over 24 months. Therefore, the total value for the first 10,000 will be 10,000 into 1.015 by 1 plus R, right, 1 plus R, R is 1.5, therefore 1 plus R is 1.015 power 24, because you have to pay interest for 24 months, right. Then what is the total amount you can collect only for the first 10,000 investment? 10,000 into 1.015 power 24. You can collect 14,295. 14,295 for the first 10,000. Now, the second 10,000. Second month beginning 10,000. 10,000 into 1.015 you have made at the beginning of second month, therefore, you need to pay interest for 23 months. You need to pay interest for 23 months. What is the total value you can collect? $14,084. 14,084. 10,000 into 1.015 power 20 for 14,084 you can collect. Likewise, you need to calculate this into all the months, right? You need to calculate this into all the months. And finally, 24th, month of 24th or end of 23, month end 23, you will make the last investment, because each month beginning you will make the investment. Therefore, last investment will be made end of 23 or beginning of 24. This is the end of 23 and beginning of, because this is the 24th month, this is beginning of 24, right? This is beginning of 24 or end of 23. Again, you will receive that cash and interest for that investment. How much? 10,000 into 1.015 power 1, because you have to pay interest only for 1 month. How much? 10,000 into 1.015 power 1, that is 10,050. 10,150, sorry, 10,150. Likewise, you will receive 24 calculations. Can you do 24 calculations? You can't. Therefore, what we can do? We can see there is a relationship. What is the relationship? There is a geometric progression relationship. If you consider last item as the first item of the geometric progression, here last item as the number 1 item, that is A, right? Then 23rd beginning or 22nd end as the second. Likewise, if you go back from end to the beginning, there is a geometric progression, increase in geometric progression, Therefore, examiner asks what is the total amount you can collect. That is the sum of the geometric progression. What is the formula? Sn, sum of the geometric progression equal, right? First A, Rn minus 1 divide by R minus 1, right? This is the formula. Now, how many items you need to consider? 24 items. Therefore, Sn, total of 24 items, 24 months, right? S24. A is the first. I have told you, consider this as the first, end deposit as the first. Therefore, it will be 10,150. Then Rn, I is what? The discounting factor. This is the discounting factor. This is R, right? This is the R. 1 plus R, that is 1.015. 24. N is 24. 24 deposits minus 1 divide by 1.015 minus 1. Let's see the answer. Keep your mind, this capital R represent 1 plus R, right? Capital R equal 1 plus R. That is very important to keep your mind, right? This capital R is the 1 plus R. 1 plus simple R represent capital R, right? Then A is the last deposit with interest. I will tell you another thing. If somebody make investment at the end of the month, if somebody make investment at the end of the month, instead of beginning here, you have only 10,000, no interest for this. Therefore, if somebody make investment at the end of the month, take this is only as 10,000. Since this is beginning of the month, last deposit will have 1 month interest. You have to take that, right? Let's see the answer now. (1.015 power 24 minus 1 divide by 0.015 into 1,150. 290,630. Answer will be 290,630. Again, I will tell you, this is very important. When somebody make investment at the beginning, you will consider this as a geometric progression to calculate the total. You will take the first number as the last deposit and it is interest. If somebody make deposit at the beginning, last deposit also have interest for 1 month. Therefore, A will be, I have told you, start from the last. Therefore, last deposit is the first number of the geometric progression, but this number have 1 month interest. Therefore, A first number will take deposit plus interest for 1 month. Then R will be 1 plus R, that is 1.015. N is number of month you will make the investment, right? However, if somebody make investment at the end of each month, that means you are not making investment beginning, you are starting investment at the end of each month, and final investment will be made at the end of 24th month. In such a case, A only 10,000, no interest, because this day you make the investment and this day you will receive the cash. Therefore, first number only 10,000 here in such a case, right? If you made the beginning, last number, last deposit plus interest, but if you made the end, only the last deposit you will take without interest. That is the way of getting the total of investment made in a regular interval at the same interest rate. Answer would be 296.30, that is D. Answer D. Let's take question number D now quickly. Question number 8. It's a big question. Let's read it first. Have a read. an individual is considering to buy a mobile phone, current market price of the phone is 50,000. I think you read the question. Now I will take whiteboard to summarize the question, right? The market price, current price of the phone 50,000, today price, right? If the phone will be purchased after 6 months, it is 56,000. After 6 months, price 56,000. If you take a timeline, because time value of money here 0, 1, 2, 3, 4, 5, 6. The today price 50,000, after 6 month price 56,000. That is the story. The balance part of the question said, how much should be amount of deposit rounded to last rupee at the beginning of each month or next 6 months in order to have 56,000 to buy the mobile phone after 6 months. Now they are asking, if somebody plan to buy the mobile phone after 6 months, he is not going to buy today, he will buy after 6 months, right? He will buy after 6 months. However, to buy at the end of 6 months, you need 56,000 rupees. Now person plan to invest some amount, equal amount each month beginning, right? That's how they ask. Yeah, at the beginning of each month, somebody plan to invest each month beginning at the interest rate. We don't know what is the rate. However, at a rate, compounded rate, they are going to invest specific value each month beginning over 6 months at a compounded rate. Finally, the total value of this investment with their interest, right, will be, should be equal to, this total should be equal to 56,000 to buy the phone, right? You also can do this. You can invest similar value in each month beginning at a compounded interest rate, then with the total at the end of the period you can buy something. Therefore, see the price at the 6 month end 56,000. Now based on this you have to plan how much I invest at each month beginning at a rate of compound interest to collect 56,000 after 6 months. The previous question, but little bit developed version. Now we need to find out what is the rate first. Let's see what is the rate. They mention in the last sentence, if the interest rate is equivalent to the annual discount rate used to calculate the present value of 56,000 and future value of, used to calculate the present value of 50,000 and future value of 56,000. That means they ask you to use the discount interest rate reflect in this scenario. Why? You can see at 0 50,000, at the end of 6 56,000. There is an interest rate, right? How we can calculate that interest rate? How 50,000 increase to 56,000 after 6 months? Like this. Take 56,000, because you know once you invest the future value equal present value into 1 plus r power n, right? Now 6 month period assume as one period, then future value 56,000, right? Future value 56,000 equal present value you deposit 50,000, 1 plus r power 1, only one period, 6 month period as a one period. Now to calculate, what you have to do, 56,000 divide by 50,000, power 1 means no power here, therefore no square root because power 1. You can take 1 also other side, minus 1 is r, therefore r equal 12% I think. Let's see, r equal 12%. 56,000 divide by 50,000 minus 1. Yeah, 12% is the. Now you can see interest rate for 12 months period according to the information given 12%. Sorry, not 12 month period, 6 month period interest rate is 12%. Now here they are mentioned that the interest will be compounded monthly. Therefore, you need to take monthly interest here. The interest rate for 6 month period 12, therefore, monthly interest rate will be 2% per month. 2% per month, right? Because 12% for 6 months, therefore per month 2%. Now using 2%, calculate how much you have to invest at monthly 2% interest rate to collect this value, right? Now let's use the formula we have used in the previous question, that is same amount invest in a regular interval at a common interest rate compounding to receive this. Therefore, formula will be Sn, the sum of these equal A into Rn minus 1 R minus 1, right? Sn you know 56,000. A is there is a geometric progression as discussed in the previous question. Therefore, A is here, last deposit. This is the last deposit you will make. But last deposit also has a 1 month. Therefore, this A will be 1 month, this A. Keep your mind, right? I will use star mark here because this A, not only the deposit, because A will be deposit plus 1 month interest. Keep your mind. This A represent, because deposit made on the beginning, right? Deposit made on the beginning. Therefore, A represent deposit plus 1 month interest. We know R, that is 1 plus simple R. 1 plus simple R means 1.02 because simple R is 2%. Then power n, that is 6 month minus 1 divide by 0.2 minus 1, right? Let's see what is the value of R. You can solve this part, then you can bring that into the other side, then you will have A. Let's calculate A first. A equal 56,000 divided by this answer of this bracket. What is the answer of this bracket? 1.02 power 6 minus 1 divide by 0.2, that's 6.308. 6.308. 56,000 divided by 6.308. A equal 877.45. 877.45. This is A. A means the amount you made at the last term plus interest, right? A equal amount you invested plus 1 month interest. Amount you invest here and 1 month interest. I have explained this matter in the previous example also. Now A calculated 8877.45. We need P, amount how much you have to invest in 1.02. Therefore, present value equal 887745 divided by 1.02. Therefore, what would be the amount you have to invest divided by 1.02? That is 8,703.3 or 8,703.4. You can see answer A, 8,703.37. That is the, they ask to the rounded figure, therefore 8,703 is the answer for this question, that is answer A. Right. Let's take question number 9. It's a theoretical question. We can quickly finish it off. What is true about annuity with reference to the statement given? What is annuity? Annuity is a similar value will made in a regular interval. Similar value make regular interval and the interest rate will be same. The statement number 1, an annuity is a fixed amount of money paid or receivable at constant time interval. Statement 2, a perpetuity is an annuity that would end after finite. No, perpetuity is a single value is going up to the end of the infinity, that is no end. And 3, if the annuity is paid at the end of the time period, it is an annuity due. Now, what is the correct statement? Actually, annuity is a fixed amount, as I told you, made in a regular interval. It's a deposit or receivable value. If it is a deposit, you have to use the total value in the future. You have to calculate the total value in the future at the end. Or if it is a receivable, you can calculate the present value of the future receivable. Therefore, annuity is a fixed value, will be deposit or received in a regular interval. Therefore, only statement 1 is true. Only the statement 1 is true, right? Now, question number 10. Present value of a perpetuity of 1000 is 12,500. What is the present value of an annuity of 1000 received over 10 years if the same discount rate for the perpetuity was used? Right. Now, this is one sentence. This is only one sentence. What is present value of a perpetuity of, that is 1000 investment made up to the infinity? Their present value is 12,500. Therefore, we can calculate like this. Present value of a perpetuity, right? The cash flow goes up to infinity equal cash flow or the future value or cash flow divided by rate, right? Cash flow divided by rate. Therefore, we can calculate this like this. Cash flow is 1000 made up to perpetuity, right? Divide by R. You don't know R, but present value of the perpetuity, you know, 12,500. Present value of the perpetuity is 12,500. It is given. The amount you invest up to the perpetuity, the infinity, 1000, you don't know R. Therefore, to calculate R, what you have to do? You need to take this R into this side and 12,500 into this side. Then what would be the formula? Let's write it again. If so, R equal 1000 divided by 12,500. Then how much the R? R equal that is 8%. Interest rate is 8%. Now, for this perpetuity, interest rate is 8%. Is that clear? I know you understood how to calculate interest rate in a perpetuity once you have the present value and the cash flow, right? Now, what is the present value of an annuity of 1000? Annuity is not a perpetuity, it will be ended. One day it will be ended, not goes up to infinity. Now, here 1000 will be deposit, goes up to infinity, but this will be invest, annuity only for 10 years. This will be invest only for 10 years, 1000. If the same discount rate for the perpetuity was used. What is the same discount rate for the perpetuity? 8%. Now, perpetuity interest rate is 8%. You have to use the same value here, right? Now, you have to calculate what is the present value of an annuity 1000 received over 10 years using the same discount rate. What is this story? Let's take that is over 10 years, right? You will receive 1000 by 1000. Every 10 year you will receive 1000 by 1000, right? Every 10 year you will receive 1000, 1000, 1000, 1000, like up to 10 years you will receive. Total as without discounting it is 10,000 you will receive over 10 years. However, what is the present value if you receive this, right? What is the present value if you receive this at an interest rate of 8%, because they ask us to use the interest rate we use in the perpetuity 8%. Let us see on the whiteboard. Now, they ask you to consider over 10 years, right? 0, 1, 2, 3, 4, 5, like you will go up to 10. Every year you will receive 1000. Every year you will receive 1000. They are asking what is the present value of all these amount will be received over 10 years. Rate should be 8% per annum. To calculate the present value of annuity into 1 minus 1 divided by 1 plus r power n divided by r. This is the formula, right? This is the present value, this is the annuity, or this can be say installment in lease. In the lease case, this can be say installment. If you pay an installment annually, right, then you can replace the word installment here, right? Now, you are going to calculate the present value of this total installment. That installment, another word is annuity. What is this formula? I think you can remember this formula. This formula called cumulative discounting factor. Therefore, you can say present value equal installment or annuity into cumulative discounting factor. You can find out cumulative discounting factor in our seminar series. Also, I told you how to calculate how to find out cumulative discounting factor using the table, or you can use the calculator. Let's see what is the cumulative discounting factor for 10 years at 8%, right? Here 1.08 for 10 years. Let's calculate cumulative discount factor, or you can use the book, right? Quickly you can use the book and find out cumulative discounting factor. Go back to the videos and see. We have completed mathematics seminar series, right? Mathematics and statistics seminar series. We have explained these things, how to arrive cumulative discounting factor using the table. The cumulative discounting factor will be 6.710. The annuity or installment 1000. Therefore, what is the present value? That is 6,710. 6,710. You can see answer D, 6,710. Now, let us move into the question number 11. The question number 11 said, an entity purchased a machine on lease. The same theory you can apply. I have told you, even in a lease case, the lease installment is equal to annuity, because you have a equal lease installment to be paid. Think about the lease company side. Leasing company, each year end or month end or whatever period end, receive a common installment. Then leasing installment for the leasing company is an annuity, right? If you want, you can discount all installment using cumulative discounting factor, then you can have the value of the asset, that is the present value, right? Now here an entity purchase a machine on lease for 5 years, implicit interest rate is 18% per annum, and entity is required to make down payment of 5 million at the time of the purchase and rest 5 equal annual installment. Market price is 3.5 million. What is the lease rental? The same story. Let's take the board now. Now the same story, but this will be into 5 years, right? Now this is for 5 years. You have purchased an asset on lease basis. You will pay installment here. These are the installment you will pay. That installment, you can say installment, or this is like an annuity, right? In the leasing company side, this is an annuity they will receive, or in your side, this is an annuity you will pay. Equal in value, you will pay each year end. Annual interest rate per annum 18%, right? 18% per annum. Now you need to calculate the present value of this installment, that is the present value of an annuity, right? Now you don't know installment, but they have given you the present value. Why? They mention the value of the asset 3.5 million, but you have paid 500,000 down payment. Therefore actually you have to pay a loan equal 3 million only, since you have paid down payment of 500,000. Therefore today loan at year 0, your loan value will be 3 million. Actually that is the present value. This should be paid including the interest with annual equal installment, that is the annuity. Now they are asking what is the annuity value, because you have the present value. Same formula you can use, because present value of the annuity can be equal to the loan, right? This is the loan. Annuity is the installment you pay. Interest rate and number of years has to be changed. Let's change these figures now. Present value, you know, you have 3 million loan pay. Installment you know, that is annuity. 1 minus 1 divided by 1.18, because 18% per annum, number of years 5, 0.18. This is cumulative discounting factor. 3 million equal A into cumulative discounting factor. Let's see the cumulative discounting factor. You can use your table. $3.127. Therefore 3 million equal A into 3.127, then A equal 3 million divided by 3.127. Answer will be 900. A equal 959,333.52053. They have taken into the nearest rounded figure 959,333. Now let's take question number 12. A detail of profit function of a company is given below. Profit function: an entity sells a single product at a fixed selling price of 200. Variable cost per unit is 120. Therefore, you can see contribution is 40. Total fixed cost for the month 100,000, and it will increase by 50% if the sales volume increase in between 10% to 25%. Sales volume for the current month is 8,000. What is the equation that would produce profit for the next month if the sales volume increase by 20%, where X and P present number of products sold and profit for the month. You know the contribution per unit. Contribution per unit here, selling price 200, right? And the variable cost 120. Therefore, contribution will be 80 rupees per unit. Fixed cost generally 100,000, but if you sell in between additional sale 10% or 25%, that fixed cost will increase by 50%. Now, this time your sales increase by 20%. Therefore, this fixed cost need to be increased by 50%. That is, fixed cost will be 150,000. Therefore, your net profit will equal, in such a situation, your net profit will equal, right, net profit, or say P profit equal, right, contribution per unit into quantity you produce, right, minus fixed cost. Now, P equal, what is contribution per unit? That is 80 rupees, number of unit X, then 80 rupees into X total contribution minus fixed cost 150,000. Since fixed cost increased by 50%, since your production increase in between 10 to 25%, therefore answer would be 80x minus 150,000. This is the answer for question 12. Question number 13. Let's read the question, right? The theoretical question. Past data reveals that certain product can be manufactured with fixed cost of here in this question there is an issue, right? I will explain this. Past data reveals that certain product can be manufactured with a fixed cost. This should be not F and. This should be not F and, because if you want, you can refer the Sinhala paper, right? In the Sinhala paper also we have the same issue, same question, right? If you have any issue, those who are following English medium, please Sinhala or Tamil paper. Now here I am referring the Sinhala paper. The question number 13 here. මේකේ තියෙන්නේ දෙන ලද මාසයක් තුල ඍජු ශ්‍රමය ඍජු අමුද්‍රව්‍ය සමග ස්ථාවර පිරිවැය සහිතව. එතකොට fixed cost and direct labor and direct material. That would be the question, right? Therefore, here past data reveals that a certain product can be manufactured with fixed cost, comma, right? This should be comma, right? This should be comma, or and then direct labor and raw material per product during the given month. Normal production capacity is 5,000 units per month, and the organization manufactures product on estimated demand for next month. Which of the following information satisfied the condition to develop simple equations to determine the total cost of production during the month? The total cost of production during the month will be TC equal, here total production cost, the requirement. To, if you want to develop the formula for this, total cost equal, right, direct material per unit into Q, the quantity, or into quantity X, plus direct labor per unit into quantity plus fixed cost, right? That would be the way. Therefore, answer is cost of labor and raw material per product and total fixed cost. Cost of labor and cost of raw material per product, that is into X plus fixed cost. Answer B, right? Now, let us take question 14. Contribution from product A and B are 10 and 50 respectively. Product A and product B, right, their contribution are 10 and 50 respectively. Total number of products sold 500, right? Total number of products sold 500. That means A plus B equal 500. Why? Total number of products sold 500 means A plus number of A and number of B equal 500. Whereas total contribution 13,000. How many A and B were manufactured, right? Now they ask how much A and B. That is the question. This can be solved using simultaneous equation technique. Why? Assume A is quantity of A, B is quantity of B. If so, you can say A plus B equal 500 units. Why? A is quantity of A, B is quantity of B. Both A and B sold 500 units. Question said that. Therefore, A plus B equal 500. Now, I am going to use the simultaneous equation technique, right? Samagami samikarana. That is the technique I am going to use. Now, they have mentioned total contribution 13,000. That means, right, you can earn 10 rupees from 1 unit of A as the contribution. Therefore, 10A is the total contribution from A. Then you can earn 50 rupees from 1 unit of B. Therefore, 50B is the total contribution from B. Now, entire contribution from A and B equal 13,000, right? Now, you have two equations. Now, find the answer of A and B by solving these two. Once you solve these two simultaneous equation, answer will be 300 and 200 for A and B. If you want, I will do it here. Now, you can see here. You can solve this question by using your calculator. Calculator has options to solve the simultaneous equations, but I will solve here in manually. You know, here 10A, here A, here 50B, here B. Therefore, you need to eliminate A or B from these two equations. Therefore, first equation need to be multiplied by 10 or first equation need to be multiplied by 50 to have equal A or equal B. Let's take first equation multiplied by 10. This first equation will multiply it by 10, right? I am going to multiply this first equation by 10, right? Now, what happened? 10A plus 10B equal 5,000, because 500 also multiplied by 10, then 5,000. Now, finally, you have these two answers, right? You have these two answers, these two equations. Now, you can see here, you can eliminate A from here, right? You can deduct this third equation from the second equation. Then 10A minus 10A 0, then 50B minus 10B will be 40B, right? 40B equal 13 minus 500 is 8,000. Therefore, you can say B equal, right, 8,000 divided by 40, that is equal 200. B equal 200. Since B equal 200, right, B equal 200, A should be 300. Therefore, answer is 300 and 200. This is the way I have arrived the answer, right? This is the way I have arrived the answer using simultaneous equation technique. Let us move into the question 15. A manufacturing organization analyzes analysis, its transportation cost of a product manufactured if 20 units and 30 units are sent to location L1 and L2 respectively. Transportation cost will be 77,000. If you send 20 units for location L and if you send 30 units to location L2, total cost will be 77,000. But the transaction cost will be 124,000 if you send 30 to location L1 and 50 to location L2. Right? Now, they are asking what is the cost of sending product to location 2. Now, this L1 and L2 we need to consider. This L1 and L2 we need to consider the cost of transport cost, right? Transport cost of 1 unit to L1, transport cost of 1 unit to location L1, say as simple X or capital X, right, capital X. Then again you can say transport cost of 1 unit to location L2, location L2 as Y. Let us take like this. Now, you can create a formula here, right? Look at the formula. If you send 20 units and 30 units to location L1 and L2, you can say 20x plus 30y equal 77,000. Why? The cost of location 1 per unit x, cost of location 2 per unit y. These are the units you sending 30 and 20. Therefore, total cost will be 77,000. Again, they have mentioned if you send 30 units for location L1, the cost is x, and 50 units to location 2, 50 units to location 2, cost of location 2 per unit y, the total cost will be 124,000, right. Again you can see here there is a simultaneous equation, right. Again you have to solve these two equations, right. Once you solve these two equations, you can have the answer for x and y. X is the cost per unit to the location L1, y is the cost per unit to the location L2. That description I have given here. I have used capital X as the cost per unit to transport the transport cost of unit to the location L1, y transport cost of 1 unit to location L2. Therefore, once you receive the answer for these two simultaneous equation x and y, you have the cost to x and you have the cost of y, that is you have the cost to L1 and you have the cost to L2. But examiner asks answer only for L2, right. Therefore, you have to eliminate x from this formula and find answer for y, then no need to spend more time, right. You have to eliminate x from these two formula and keep only y, then you can directly take the answer for y because they are asking cost to location 2. Once you solve this simultaneous equation to eliminate x, what you need to do, here 30, here 20. Therefore, to take this 20 into 30, this need to be multiplied by, right, this formula need to be multiplied by 1 point, right, this need to be multiplied by 1.5, then 20 will become 30. Therefore, let us write down, we will multiply this bolded formula by 1.5, right. If you multiply it by 1.5, 20x into 1.5 will be 30x, right, plus once you multiply this 50 by 1.5, right, it will be 30y into 1.5, then it will be 45y, right, equal 77 into 1.5. If you multiply 77,000 by 1.5, 115,500. Now you will ask why I have take this 1.5, because I have multiplied this formula, this entire formula I have multiplied by 1.5. Why I have multiplied by 1.5? Right? I wanted to multiply it by 1.5 because here 30x, here 20x, I need to find out value of location 2, that is y. Therefore, I need to eliminate x from these two formula. Here 30, here 20. Therefore, take this into 30. 20 need to be multiplied by 1.5 to have the 30. Therefore, entire formula has been multiplied by 1.5. Now, we have the two formula for the simultaneous equation like this, right. Now, once you eliminate these two, that will be 0. Here you can say 50 minus 45y, that is 5y, right, equal 124,000 minus 115,500, that is 8,500. Therefore, you can say y equal 8,500 divided by 5, answer 1,700. Let's see the answer here. Answer is 1,700. I think you can see here. Answer is 1,700. They are asking only the cost to location 2. Cost to location 2 presented by y. Therefore, answer for y is 1,700. Now, let's take question 16. What is the value of intercept when the slope of a linear equation is 2 and one of the coordinates of the graph with same equation 5 and minus 3? Actually, when the coordinate given like this, the meaning of that, the value of x equal 5 and value of y of the coordinate equal minus 3, right. That is the meaning of this. The 5 and minus 3 means value of x is 5 and value of y is minus 3. Now, the slope is 2. Slope is the equation, linear equation. Here, this is the linear equation. What is linear equation? You can present your linear equation like this. Y equal a plus bx. Y equal a plus bx, right. What is this b? This b is the slope, right. I can say the simple b represent the slope of the equation, right. The simple b represent the slope of the equation. Now, it is equal to, right. Here they have mentioned the slope equal to, right. Slope equal to. Therefore, You have the y value and x value here. Now, slope equal to, you have the y value and x value. Now, you know what is the slope, that is equal to, you have the x value and y value. Therefore, you can develop your formula, right. You can x value and y value here, all these three values you have. Let us copy this here and take into this, because we have the formula here. Look here, you have calculated slope as 2, right. This is calculated slope, the b is the slope, that is given as 2. Then x value you have 5, that is x value is 5, b given as 2, right. Then 2 multiplied by 5, that will be 10. The y value given as minus 3, therefore, 2 into 5 10 plus 10, when it is taken into this side, that will be minus 3 minus 10, right, equal A. A is what is? A called in a equation, A called intercept. Therefore, intercept will be minus 13, minus 3 plus minus 3 minus 10 is minus 13. Answer is minus 13. Let us take the question 17. Revenue function of the product X. This is the revenue function. Variable cost per unit 1500 and total fixed cost 80,000. What would be the profit when the sales volume 120,000? When the sales volume 120,000, they are asking the profit. Let us take this now, right. Now, this is revenue function. Revenue function can say TR. TR equal 45 x power 2. I will take as x power 2, right. Let us try to change it. x power 2 plus wait a minute. Plus 2000, right. That is total revenue. Now, you can select total cost formula also. Total cost will be 1500 is the variable cost, fixed cost is 80,000. Therefore, you can say 80,000 plus 1500 units into x. X is the number of units, right. Now, you have the total revenue, you have the total cost. When you have the total revenue and total cost, then you can calculate, right, the profit function. Profit function equal, right, total revenue minus total cost. What is? Therefore, profit function you can say total revenue is this, right, this is the total revenue We can copy and paste here. Don't copy and paste by yourself, right? You have to write it down your answer sheet. Then minus entire total cost formula here. This is total cost, right? Total revenue minus total cost. This is total cost function. Now let's simplify this formula. P equal, right? This will remain as it is, you know, in when you solve in this. When you solve in this, what will happen? This formula, let's take as it is here. Then let's see what will happen. This will remain as it is, this will remain as it is. Then bracket will eliminate and take minus. When bracket eliminate, this also become minus and this bracket will eliminate. Let's see what happened then. P equal, the 45 remain as it is, 2000 and 80,000 will sold and this will take as it is. Let's copy here. Then this 45 x power 2, 45 x power 2 remain as it is. This 2 will be sold. Why? It become minus, right? It become minus 78,000 and this remain as it is. Therefore, this is the profit formula, right? Now, to this profit formula, you need to apply 120 for the place of x. This is the place of x, right? Here you have to apply 120 and this is the place of x, you have to apply 120. Now see the answer, right? This should be minus. Let's see the calculate the profit. Profit equal the solution of this, that would be 309,000. Let's see, 120 power 2 multiplied by 45 minus 78,000 minus 1,500 into 120, 390,000. You can receive this answer, 390,000, right? Now I will give another simple method. Once you reach this total revenue and total cost function, apply x here, right? Look here, apply x here. Once you apply x here, that is 120, right? Then apply x here, that is 120. Now you can have total revenue and you can have total cost. The difference of that two also the profit. Any method you can use, that is question number 17, right? You can take total revenue here, you can take total cost here, then difference will be the net profit 390,000, right? Let's take question number 18 now. Yes, we completed 17, now 18. What is profit function? If the revenue function and cost function in relation to the product given as R equal 300x minus 2x power 2 and C equal 5000 plus 40x respectively. What is the profit function? Very simple. To have the profit function from revenue function, right? You have to deduct the cost function, then you will have the profit function. Let's take from this function, you need to deduct this function. Therefore, this 300x remain as it is minus 2x power 2 minus 5000 minus 40x. Now this 40x become minus 40x. Therefore, 300x minus 40x minus 40x, that will be 300x minus 40x will be 260x. here you can see the answer 260x, right. Then 2x squared will remain as it is, because here no any 2x squared or 3x squared, only x squared, no. Therefore, 2x squared remain as it is and no complete number here. Therefore, this 5000 will remain as it is. Since you r minus t, this will become minus. Therefore, answer is A, right. I think if you want, I can show you how this answer will create, right. Look here, revenue minus cost is the answer. Revenue is 300x minus 2x squared, right, 2x squared then to its squared then you need to take minus the cost function, that is 5000 plus 40x. Now try to remove the brackets. When you remove bracket, what's happened? 300x minus 2x squared minus this bracket will eliminate, right. Therefore, this sign will become minus and bracket will eliminate. Then you can see only this 40x and 300x will solve. This is plus, this is minus. Therefore, you can eliminate this. Then this become 260. This is the answer, right. That's how you have to obtain it in mathematically. Only thing, keep your mind, total revenue minus total cost function is the profit function. Then let's take question number 19. Based on the past demand, an entity has defined price a product in a linear equation as P equal 60 minus 0.005 Q. Q is the quantity. What is the total revenue when the demand is 5000? We know when you have the price function, right, based on the price function we can develop the revenue function. Then when you have 5000 units, they ask what is the revenue. Answer was given as 175,000. Let's see how we can consider this. Price function given, price equal 60 minus 0.005 Q. From the price, we know we can have total revenue. Total revenue equal price multiplied by Q. When price multiplied by Q, right, when price multiplied by Q, you can have the total revenue. They ask what is the total revenue when the quantity is 5000, sorry, when the quantity is 5000. Now total revenue equal price into Q. Now this, for the place of this price, you can substitute this value as the price. Therefore, you can copy and paste here price as this. Once you multiply this entire equation by Q, right, that is the total revenue. When you multiplied Q by 60, you have Q here. When you multiply this by Q, you have Q 0.005 Q squared, right. That would be the answer. Then once you multiply, this will be deleted. Now this is the total revenue function. Now substitute 5,000 here, because they ask what is the revenue when you sell 5,000 unit, right? Substitute 5,000 here. Now answer will be 175,000. Let's check that. 5,000 into 60 equal, then you have to minus 0.005 into 5,000 power 2, 175,000. That is the answer. Now let's take question number 20 now, right? Read the question number 20. What is the quantity of goods to be sold? What is the quantity of goods to be sold if an organization wants to maximize revenue? It faces demand function as Q equal 1000 minus 200 P, where P is price, Q is demand. Now their question is, what is the quantity of goods to be sold if organization wants to maximize their what they want to maximize? They want to maximize their revenue. Look here, they want to maximize their revenue. To maximize their revenue, you need to find out the revenue function first. Let's first find out the revenue function, right? Now we have been given this demand function. How we can develop revenue function from demand function? Right. Let's calculate or develop revenue function from demand function, right? Now we need total revenue function. Total revenue equal, right, price multiplied by quantity, right? Price multiplied by quantity is the total revenue. Now do you have price function here? No, you don't have price function here, but you have quantity function. Therefore you can find out price function using the quantity function like this. Your quantity function equal 10,000 minus 200 P. This is P. If you can isolate this P, you can have the price function. Now we are in the process of developing this price function. If you can isolate this 200 P and P, you can easily create price function. How? We will take minus 200 P into this side, then it's become 200 P equal 10,000 minus Q. Now you need to isolate only P, therefore you will take P equal 10,000 divided by 200 minus, in front of Q you know you have only 1, here you have only 1, therefore here you can say 1 divided by 200 Q. Now once you divide 10,000 by 200, how much? It is, I think, 50. 10,000 divided by 200 means 50. Then 1 divided by 200, how much? 1 divided by 200, 0.005, right? 0.005. This is the answer, 0.005. Now you have the price function. See, this is the price function. Now this price function can be taken into this place. This is the price function, right? Not, since it is not a single value, you have to use the bracket. Now, to have the total revenue function, you need to multiply this by Q. Okay, let us multiply this by Q. Each value will be multiplied by Q. Here 50, it will be 50Q. Here, once this multiplied by Q, it will be Q squared, right? It will be Q squared. Now, you can remove the brackets, right? This is the total revenue function. Now, they ask very nice question, maximizes revenue. To maximize the revenue, what is the quantity? This is a very nice theory. I will tell you, listen to me. This part I already covered in our seminar session also. Please go back those videos and watch. When there is a function, when the function developed on a graph, that graph will turn, right? On those turning points, the slope will be 0. Slope will be 0 means the value of the dependent variable, here dependent variable is TR, will be 0. When the graph turning, the value of dependent variable will be 0 because slope, there is no slope. Since there is no slope, when the line turning on a graph, right, go back to the video and see, when the line turning on a graph, the slope is 0. Why? The value of y in a general formula, y, here it is TR, dependent variable, become 0, right? Therefore, when the slope becomes 0, the slope becomes 0, that is the maximum point or minimum point of the line. Is that clear? When the slope becomes 0, line will turn. Is that clear? I told you, when you plot a line or graph formula on a graph sheet, that line that represent the formula will turn. At that turning point, the value of here, value of TR, right, at the turning point, value of TR will be maximum or minimum. Got it? Value of turning point, value at the turning point, value of this TR, dependent variable, will be maximum or minimum. Clear? To take the maximum value or minimum value of this TR, what you need to do? You need to find out the turning point. That is the theory. I will repeat it. Listen to me carefully now. When a formula plotted on a graph sheet, you have a line. Is that clear? Number 1. Right. Now, this line will turn. These turning points, right, at these turning points, value of this dependent variable, the highlighted dependent variable, right, will be maximum or minimum. Is that clear? It will be maximum or minimum. How we find out these turning points? The point that line turn. Point that line turn is a specific characteristic. It has a specific characteristic. What is the characteristic? The value of the turning point can be considered using the slope. Check a turning point. There is no slope actually. When you find a turning point, go back to my revision program and see, right? When we take a turning point, the slope is 0. If you find out the slope and when it equal to 0, that is a turning point. Turning point is the maximum or minimum point. How we can find out the slope? To find out the slope, right, you can differentiate this formula. Once you differentiate this formula, the differentiation of a function will give you the slope. Therefore, slope equal right, slope equal d TR divided by difference of Q, that is the differentiation, that is equal here power 1 into 50, 50, then 1 minus 1 Q will be vanish, then minus here power 2 into this will be 0.01, right, Q, because 2 minus 1 is Q. This is the differentiation formula of the total revenue. Now I can say the slope is equal 50 minus 0.01 Q. Once the slope equals 0, it is a turning point. It is a turning point, right? Once the slope equals 0, it is a turning point. That is a maximum point or minimum point. Therefore, we can say 50 equal 0.01 Q. Therefore, I can say Q equal 50 divided by 0.01, that is 5000, right? That is the answer is 5000. That's how we have arrived the answer. Now I will summarize. Maximum revenue represent when the revenue function's differentiation equal to 0. Therefore, find out the maximum revenue quantity. What you have to do? Find out the revenue function, then differentiate it, then differentiation function equal to 0. Once it's equal to 0, right, you can have the value of Q, that Q is the maximum quantity to maximize the revenue, right. If you want detailed explanation, go back to our revision program and watch the videos. Now let's move into question number 21. What is the value of x at its turning point of equation given below? The same theory going to be tested. This is a formula, right? This formula we can take here, x power 2 minus 4x plus 4 equals 0. What is the question? Value of x at its turning point of the equation. Turning point means what? Turning point means the slope becomes 0. At the turning point, slope of the equation becomes 0, right? That is the theory. I have explained it in my revision program. Turning point means slope becomes 0. What is slope? What is the slope of an equation? That is the differentiation of that equation, right? That is the differentiation of that equation. Okay, let's take the differentiation. The differentiation is dy by dx, here dy by dx, right? Dy by dx, that is equal, let's take in the second line. Once you differentiate this equation, power 2 multiplied by the coefficient, then 2x minus 4, here power 1, 1 into 4, 4, 1 minus 1, 0, therefore x will be vanished. Therefore, this is the slope. When it's equal 0, it's a turning point. When the slope is the differentiation function, is that clear? Slope of this formula is the differentiation function. When it's become to 0, right, that is the turning point. Therefore, value of the turning point we can calculate. We have to isolate 2x equal plus minus 4 when it's come to the other side plus 4. Therefore, x equal 2. Answer is 2, right? Answer is B. right. I will summarize the theory. To find out the value of independent variable, that is x, at the turning point, keep your mind, you need to find out the slope. Why? At a turning point, slope is 0. Therefore, if you calculate the slope function and when it becomes 0, you can have the x value, right. How we can calculate the slope? Slope of a function is equal to its differentiation function. Once you differentiate a function, that is the slope function, then equal it to 0, that is the turning point. Then find out the x value, that is the value at the turning point.